About 5 years ago, my wife and I got our first home with a 15-year fixed mortgage with a 3.25% interest rate. And yes, this was a great blessing. This was huge for us to get. But now we're at that point where we're thinking about trying to pay off the mortgage faster. And yes, I know there are some pros and cons. And so that's what we're going to address in this video. So maybe if you're in the same boat wondering whether you should pay off your mortgage faster or not, this video should help you figure that out. Now, if my wife and I did nothing at all but pay that minimum payment to the bank, we would have paid our house off by the time we'd be 47, 48. That's not bad. I mean, that's a pretty good age to be debt-free from your home. And honestly, I'm happy with that. I'm not trying to rush that at all, but it's a question about, hey, well, maybe we can add a little bit extra to our monthly mortgage payment that will allow us to pay off the house maybe a year sooner or 2 years sooner. And along with that are some pros, which I've listed some of them here. One of the pros of paying off a mortgage faster is that you're going to end up paying less in interest on that mortgage balance, especially if you have a higher interest rate. Now we're at 3.25%. So paying off the mortgage faster might not be such a great idea, but we're still going to be debt free. We'd still be able to have no interest that we'd be paying on that mortgage balance. So in some ways, if there was nothing else that we would be needing the money for, maybe investing or other debts that may have higher interest rates that we're paying, yes, paying off this mortgage would make sense because we're able to take that 3.25% interest rate and that's coming back to us. However, at this time, yes, we are paying that 3.25% interest on the mortgage balance each month, every year. So I do think that that would be a benefit for us to go ahead and pay off the mortgage faster, knowing that we're going to be able to get interest, that 3.25% interest coming back to us. Now, another pro with paying off that mortgage faster is you're going to become debt-free faster, which means you'll feel more financially free. You're going to have a peace of mind knowing that you don't have to worry about that $1,500, $2,000, $3,000 mortgage payment that's going out every month, which means you're going to be able to take that monthly mortgage payment and use it for investing, use it for maybe other debt that you have, use it to do whatever you want with that money because you're not having to worry about that mortgage payment that you're paying $1,500, $2,000, $3,000 again, and that money can go towards investing and building a bigger nest egg for you and your retirement. Now, the last pro that I would say is you're building equity. Yes, you have that opportunity to borrow against your home. I am not a fan of this, but you always have this option in case there is an event where there is some kind of financial disaster that you just need to borrow the money. And being able to have a home that's paid off gives you the flexibility to borrow against the home in the case that you need to, and can make that process of taking care of whatever financial disaster is going on just a little bit easier. Again, I am not a fan of borrowing against your home. And if you're someone who is on track to pay off your mortgage faster, that probably means, well, you have a decent amount of savings, a 3 to 6 month, maybe a full year's worth of savings that you can rely on. So I'm not too worried about this, but it is still a pro because your net worth is continuing to increase and go in the positive direction versus the negative direction, which just means overall, your overall net worth is continuing to increase, which is definitely a pro in my book. Now, the cons, the negative parts of paying off that mortgage faster. Well, number one, you're going to miss out on investing opportunities right now and potential higher returns. There's no doubt that in the last 10, 12 years, you would be making more money in the market that would be better for you to invest in rather than pay off that mortgage faster. So yes, there is a trade-off. By paying that mortgage faster, you're going to miss out on opportunities to be able to, maximize your investment portfolio and make more money in the market by investing in, low-cost broad-based index funds, the ones that I like, that could maybe 2x, 3x, 4x your net worth over the long term. This has kind of been our situation where we do have a considerably low interest that we're paying on our mortgage at 3.25%. We have a low interest on our mortgage, so it might be better for us to just keep it where it's at while we explore other investment opportunities in the present moment. Now, if I had something like a 6.5% or a 7% interest rate on my mortgage, then yes, I would definitely be looking at trying to pay off that mortgage faster. But at the moment with the 3.25%, we don't want to miss out on opportunities to invest where we could make 7%, 8% in the market, or even maybe 10% in the market year to year, and focus on paying on that mortgage faster. It's kind of mathematically, it just doesn't make sense, right? But, emotionally, yes, it makes complete sense to pay off that mortgage faster. Another con, and this is going to be specific to the way your loan was set up, but you may have potential prepayment penalties. And again, you're going to need to check on the terms of the loan. Sometimes these banks like to penalize you for paying off that mortgage faster. And this is because they're not going to make as much money as they would have otherwise if you just kept the duration of that mortgage at 15 years or 30 years. So check with the bank, check with the financial institution that you got your mortgage with to make sure that there are no prepayment penalties that you may incur if you try to pay that mortgage off faster. Now, another con that we have kind of toyed with is obviously missing out on all the things in life, right? You want to travel, you want to do things with your family, you want to do things for yourself, you want to buy this, you want to buy that, and you may feel a little apprehensive, you may be a little bit resistant to do some of those things while you're focused on paying off that mortgage faster. And that is a trade-off. That is a con that I think a lot of people do think about. Unless you're just 100% committed to paying off that mortgage faster, you may come across times where you're just like, oh, we can't afford this at the moment because we're focused on paying off our mortgage faster. I do like trying to find a happy medium, a balance with that. Maybe once you have a 3 to 6 month emergency fund or a 6 to 9 month emergency fund, you may want to dive into maybe having a buffer, having a spending fund where you can go and start collecting money into that bucket of money that you budget for, obviously, and just say to yourself or your family, hey, this is the money that we're saving for a vacation. We're not going to tap into what we're paying extra on our monthly mortgage payment, but we are going to set aside some funds where we can travel, or we can go to do different activities around the city, or just, participate in whatever kinds of different events that may be happening. Or maybe someone wants some new furniture or an upgrade to the home that you're living in. I'm not going to say anything negative for those of you who may feel like I want to spend some money to enjoy some parts of my life. I do believe that people should enjoy their lives, right? But I want to make sure that you're doing that responsibly. So if you do find that you're adding too much extra to your monthly mortgage payment, that it's causing you to feel bitter, you feel upset or sad that you're not able to do those things, well, maybe you dial it back a little bit and take half of what you're paying and use that to fund things like fun activities for you, yourself, or you and your family, whatever the case may be. So here's what I would say. If we had a 30-year fixed loan, then we would definitely be looking at ways to pay off that mortgage faster, to take it down to like a 20-year or a 15-year commitment. With a 15-year fixed loan, I think we're pretty comfortable right now not making any extra payments. So that way we can invest in our 401ks, our HSA, our 529 plans, summer vacations, all kinds of different expenses, doing whatever we can to contribute to nonprofit organizations, any charities that we're passionate for, and then just enjoying our lives and finding that balance. I think the 15-year fixed mortgage does help with that approach. A 30-year fixed mortgage is tough because, it's that long-term mortgage payment, but if you can add a little bit extra to take it down to that 20 or 15 year time frame, I think that would go a long way for those of you who are watching, because yes, you're going to pay less in interest, you're going to be mortgage debt free faster, and I think you will have a peace of mind when you get to the end and you won't have any regrets. I don't think I've ever seen anyone who has said I had regrets paying off my mortgage faster, but I could be wrong. Folks watching the video, let us know in the comment section below. Let me know your thoughts on this matter, because yes, this is not a one size fits all topic, but again, I do lean toward paying off a mortgage sooner if it doesn't hinder other financial goals that you may have. Now, recently, I found some pretty interesting financial statistics that you might be interested to know, and the video on the screen is going to go deeper into it. Check it out, or check out the other video on the screen that YouTube says you should watch, and I'll see you soon. Peace.